Hi, I'm Phil Thomas, an exploration geologist and CEO of Spey Resources Corp. Our code is SPEY, and we're exploring for lithium in two salars, Incahuasi and Pocitos in Argentina. And we've just completed an exploration program in Incahuasi, so we'll be looking to start a production program in the near future.
Well, hello, Phil, and welcome to our show. Thanks for coming aboard. Lithium, obviously, really firing on all cylinders at the moment into the EV revolution that everyone is talking about. Can you give us a bit of background on you and how long you've been with the company?
Yeah, sure. Look, I've only been with the company 2 months, and I've been working as a consultant prior to that. But my background goes back to AIS Resources, where I was president and CEO, and we optioned two of the 4 projects we had in the Pocitos Salar to Spey Resources, and unfortunately Spey was halted in trading for 12 months, and so they optioned Pocitos I, which is an 800-hectare property, to Recharge Resources, who are drilling right at the moment. I've had 20-odd years experience in lithium, probably one of the more experienced guys around the traps. I basically discovered the Rincon project, got it into pilot plant production, sold it, and of course recently it's been sold for $655 million to Rio Tinto. I sold it back in 2008 in the GFC for $21 million. So it just goes to show what an increase in the lithium price does to properties. Then I explored Pozuelos. Then I joined AIS Resources in 2016 and explored Washita, Vilama, Salinas Grandes, Incahuasi. So I've had about a significant amount of experience both drilling, exploring, and putting projects into production. And for my sins, I'm also managing director of Ekosolve, which is a new direct lithium extraction solvent exchange system that we were working on, been working on for the past 4 years, and now we have 8 contracts to deliver Ekosolve systems, of which Spey is going to be the first recipient of that system.
Well, okay, thanks for that. I appreciate that. So tell me about the trading hold. When did they come off that?
It came off about 3 months ago. It was partly to do with the reverse takeover of New Tech Lithium, which had the options over Pocitos and the Incahuasi properties. And then the BCSC decided that was an RTO, not an acquisition, and so they made the Spey executives go through that 12-month period. Also, parallel to that, I was, as the project director, doing the 5 exploration wells at the Incahuasi Salar, and we needed a 43-101 to be done on that, and of course it was right in the middle of COVID. In fact, Tola Grande, which was about 45k away, I think they had something like 45 out of 120 people with COVID. So just getting onto the property was a challenge, notwithstanding doing a 43-101. But we got it done, and that's now on CEDAR, and you can see it on the company website.
Right, okay.
speyresources.ca.
Okay, and so tell me about the sort of structure of the team, because it kind of feels like it's been a finance team set up here in terms of lots of bells and whistles and tweaking things, but not really kind of moving forward. And you're the kind of, I guess, the big signing here, the big new signing, the big quarterback. What was your brief? What are they asking you to do to help them move forward?
In 3 years, have $1.4 billion a year in revenue.
Right. Is that realistic?
It is, and I'll tell you why. During my 20 years, I've developed a lot of relationships and seen a lot of transactions in Argentina. So I'm the cornerstone. I'm like the policeman directing the traffic, notwithstanding I'm a very seasoned lithium brine geologist, and also a fellow of the Australian Institute of Mining Metallurgy, a member of AIG, and a director of the Australian Institute of Mineral Valuers and Appraisers. So I have some fairly strong ethical considerations sitting around me as well. But notwithstanding that, those affiliations, We have 4 geologists. We have 2 geohydrologists. We have 2 legal teams. We have a logistics manager second to none. But most importantly, we've got a system in place where we get 280 pesos to the dollar, whereas the National Bank of Argentina rate is 143. How do we do it? There are 9 exchange rates in Argentina. So being obviously familiar with how everything works, we set that up in the early days. And so now we can get the EVA, which is 21%, which is a big chunk, back from our expenditure. And shortly we'll be registered as a mining company because we own Incahuasi and Candela II, which is the tenement name or the mine name. And so we'll get the double depreciation and all the other benefits that Argentina is handing out for mining companies.
Right, but you raised recently just 2.75 million, was it something like that?
3.7 million Canadian.
3.7 Canadian. Okay, still not a chunk of change in the context of driving a company within a 3-year time frame to 1.3 billion a year. How do you make that seismic leap each year to get to that point, and where's the revenue come from?
Okay, it's a 2-stage strategy, really. The first stage is putting production wells, and because AIS Resources drilled Pocitos in 2018, we got about 130,000 litres an hour, and so now we're twinning those wells to make sure that that's the number. Make sure we get those big aquifers, and then we need to produce about 25,000 megalitres a year of brine to get to 10,000 tonnes of lithium, which on a long-term contract basis is about $40,000 a tonne. On a spot basis, currently it's 80,000. It'll probably wander back to the 50s or 60s over the next 2-year period. The second part of the strategy is that we're going to use debt, and we're going to use an offtake contract, which you would have seen our announcement 2 days ago with the Australian group Richlink, and they have 2 very large Chinese lithium product manufacturers, and they want lithium chloride, and the Ekosolve system generates lithium chloride. So we have a plan there where we'll do a pre-sale at spot for 2,500 tonne, and if you do the numbers at 40,000 tonnes, that's 100 million, and that gets us going to repay our debt that we need, which is about 70 million. And we'll have a prepay of 70 million, or we'll have a prepay of 100 million, but we'll only need 70 of it to pay for the plant completely. So in 1 quarter, it's basically done. The second part of the strategy is in the next 12 months, Ekosolve is going to put in 25 million US, and we will put in 25 million US, which will be probably half debt, half equity, and build a 1/10 plant, which will be 1,000 tonnes, which will generate, we'll have to sell it in the spot market, somewhere between $70 and $80 million. So we'll have a 10 million surplus on the cost of the plant, which we can amortise, obviously, over a much longer period of time. And that'll give us a price earnings index. So when we go to raise that money, we won't be raising it at the current price. We'll be probably raising it, if you do the price earnings multiple calcs on the number of shares we've got out, which is roughly 109 million, it comes up to about 80 or 90 cents a share. So, and that's just on a PE on 1,000 tonne plant, and then we can add the additional modules to bring us up to 10,000 tonnes.
Right. Okay. So help people, because there's sort of danger of people think, oh, this is a bit of a spreadsheet exercise here. I want to get down to the realities of how this gets done. So the prepay is obviously super important with Richlink. What are the conditions precedent on that before they release capital to you? And you seem to be kind of going straight through to production plant. There's no kind of phasing or testing or demonstration plant. How do you justify that?
Let me fill you in on that. So what happened last year was we pumped 11,000 litres an hour from Incahuasi, from the Candela II mine, and we shipped 600 litres to the pilot plant that Ekosolve have at the University of Melbourne. We used 3 laboratories to test the final product, and We did it 3 times. Plus, just to be sure, we took some brine from Pocitos, which is over the hill from Pocitos, to test it as well. Out of the 3 tests, we also tried some brine that had very, very low levels of lithium in it, 37 ppm, almost just a smell of lithium. And we managed to recover 34 ppm of lithium. So we got a 96% recovery rate. So we thought, maybe that's too good to be true. Let's do it on 200 litres and see how that goes. We got exactly almost within 0.1 of a percentage point, a 96% recovery. Because the Ekosolve system only takes out the lithium in the solvent and doesn't touch any other element, you can't help but get pure lithium because it doesn't absorb anything else. So when we wash it with acid, we get a fantastic result of lithium chloride, because we use hydrochloric acid to clean the solvent, and we produce very, very high quality lithium chloride. If we add it to sodium carbonate, we easily produce 99.5, 99.6% purity lithium carbonate, and getting 96% of the lithium out of the brine. So with all that development work, which took 4 years, we're finally at the situation where the proof of concept has been done, the proof of the pilot plant has been done, and I guess the other point which I have to labour on is we're using solvent exchange. It's been around for 50 years. You can see jumbo column systems at Rio Tinto run for uranium. You can see them all around the world. It's not rocket science. What the rocket science is the application to lithium, and there are 2 aspects of it that you can't find in a normal textbook, chemical engineering textbook. So from that point of view, we're very, very positive. We've done a detailed risk analysis on spreadsheets and on risk management, and we're down to like 99.5% probability of success.
Okay, so the Ekosolve pilot plant at Melbourne University, you said, that's obviously you've done the testing with them, but has that been ramped up to scale? Is it being used elsewhere? You mentioned you've got 8 contracts, so who's sort of successfully using this technology today on a commercial basis?
Yeah, look, it doesn't need to be. There's kind of 2 answers. Yes, it's been done on a 100,000 ton plant, but only for uranium, not lithium. What's the difference? The difference is the solvent and the way that you operate it. In solvent exchange, there are tanks which are used for uranium, copper, nickel, and other metals, for soybean oils, for a whole range of tasks. And then there are columns, and the columns are the fast reaction solvents. So we're using columns because it takes 22 seconds to take the lithium out of the brine. And we do 10 washes because there's a chemical curve that we can follow to see whether we've maximised the recovery of the lithium. And so we're right on that curve at the 10th wash. So there's no point taking it from 94% to 94.2% by doing another wash, because it from a time and from a recovery point of view, it doesn't make sense. So yes, we've looked at it operating in jumbo applications, not for lithium. We believe from the work that we've done and from the work that other people have done, the scale up isn't really a relevant question. It's because what you're saying is, if it works in a 30-litre pilot plant, what do you need to manage to work in a 10,000 ton plant? And the answer is nothing, because the process time is so fast.
So what you do, you have lots of modules. I mean, what do you mean? There's no issue with kind of scaling it up, because I think lithium, like uranium, actually very, very technical product. People talk about how hard it is, the skills required to do it, and to kind of step up from lab, pilot, demo to full commercial seems to be the conversation seems to be it's complicated, or else everyone would be doing it. So why is it so easy for you?
Everyone else is doing it. There's more than 120,000 solvent exchange plants around the world, but no one's doing it for lithium. And the reason why we did it with lithium was because the magnesium in the brine is so high that ion exchange, absorption, reverse osmosis, fractional crystallization, all of those technologies don't work because of the size of the magnesium ion playing its role with hydroxides or other chemicals. The beauty of lithium is that it has a high EV, and it's a very, very small atom. So when you combine it in with a hydrocarbon, that's the only thing that gets let into the solvent. So we don't have to worry about other elements coming in. And this is where there's some confusion in that all those other pilot plants and if you're doing nickel, if you're doing cobalt, uranium, etc., you've got a whole bunch of other materials running around that you have to try and separate. Whereas we don't have that issue. We're putting all the magnesium, all the potassium, sodium, calcium back into the salar. All we've got in our mixture is lithium. Nothing else.
Okay, so in terms of the environmental components, you're not going to get any kind of kickback. We've seen a bit of that happening down in South America. Can I just ask about, coming back to the rich thing, the question I asked earlier, which was, what are the conditions precedent on them releasing the capital? What do you need to have done? Because they obviously are bought into the Ekosolve as a solution for the extraction of lithium. But what do you need to have done yourselves before they say, right, here's the money, here's the debt? It is debt they're providing, is it?
Yeah. It'll be debt for the big plant, for the 1,000-ton plant, as part of the 25 million. Although at this stage I haven't subscribed to that 100% because we may do that with equity, especially if the share price is heading north of 50 cents. Because it's only another 50 million shares, and when you do all the PE calculations, it makes it worthwhile. But for the 10,000-ton plant, yes, it'll be a combination of debt, not from the Chinese, from others, secured on the plant, and then from the Chinese, the pre-sale will be us having run the 1,000-ton plant for a couple of weeks or a couple of months, depending on what they require, but delivering them with lithium chloride product, which we already have right now in Melbourne. We've got a couple of 100 grams of lithium chloride that we produced, and lithium carbonate. So it's your typical framework agreement where it'll be a letter of credit. There'll be specific circumstances of quality, quantity in that letter of credit, and so off we go for the delivery. But the pre-sale cash will be offset against the letter of credit. So your normal trading terms will be there, but it's just that there'll be a pre-sale agreement sitting beside it.
Right. Okay. And there seems to have been, I made some reference to it earlier. I think obviously the guys have been sort of spinning plates or juggling or whatever analogy you want to use, to try and get interest in the concept which you have introduced to the company. So there's been a lot spent on marketing. You've just come back from a road show. Well, in fact, tell me about that. So you've been on a road show, had lots of meetings. Share price hasn't really moved much as a result. What is it that they're missing, or what is it that they're waiting for you to deliver before they would say, right, this feels like you can hit this billion plus 3-year time frame?
Look, I think it's a number of factors. One, we have huge volume. Like, we're trading anywhere between 1 million and 3 million shares a day, which, if you have a look at all the lithium stocks, they're nowhere near that amount of shares going through. If you look at our position, we were up to 65 cents at one stage. There's a lot of sellers coming in. There was a placement at 17, so some of the day traders are selling, and eventually they'll get cleaned out and have to come back in at 24, 25. I think the milestone of doing a production well in Pocitos and coming up with a flow rate with a lithium assay, and the same thing in hole number 5 at Incahuasi, that will signal to people that it's on. and so what we'll do is we'll basically continue with 3 holes in Incahuasi, and then figure out how many more we need to produce 10,000 tonnes a year, which gives us our 700 million at spot, 400 million at long-term contract, and then at Pocitos, exactly the same thing, drilling 1 or 2 holes, because we already know there's another 2 holes there on Pocitos I, and that will then give us a trigger that we're in the business to run. Unlike all the other guys that are building ponds, Argosy and Gallon and so forth, at different salars, but we don't have that time frame. We're building now, and working with Ekosolve's banking people to get that project up and running, because we already know from the AIS work in 2018 roughly what the lithium values were. They're around sort of 150 ppm, and we know that the Ekosolve system can deliver 143, so we can use that as when we're doing our calculations.
Okay, and just in terms of the who owns what, right? Because obviously the company Spey's coming from a sort of low base. You've stepped in, which is great. Credit to them with your background. Ekosolve obviously providing the IP, as it were, in the solution here. What's the financial arrangement? Who gets what in that relationship?
Ekosolve gets a 5% royalty, which is its license fee, and that was done way back with NewTek Lithium before the takeover, and then the contract was assigned to Spey Resources. So that's been in place for quite a while. And Ekosolve has a separate board of directors, and then Spey has its board of directors, and at the moment we're adding another. We just added Jose Castillo Alem, unbelievable experience, chemical engineer, a lot of experience in ion exchange, worked for Orocobra for a number of years, was their country manager till 2014. Prior to that, had a lot of good ion exchange experience with FMC. He's on the board of Lithium Chile, and also got his own exploration company. Has written a fantastic book on a range of topics in the lithium industry. So Jose and I have had some fantastic discussions about how to build the business. Clearly, living in Salta, he knows what's going on from day to day, whereas I only find out week to week. And so he's got the nose to the grindstone, so to speak, and gives our people in Salta someone to talk to in my absence, but which is great.
Okay, so just on Ekosolve, so 5% royalty. What about other remuneration for them? I mean, they've got to kind of use their own balance sheet. Kind of, really, that's it, 5%.
Yep.
Okay.
Yep.
Net.
Yep.
Royalty.
With the plant, with the 1,000-ton mini plant, it'll be 50% owned, and then Spey will pay us a premium to buy their share out, because obviously we'll be producing $70 million a year roughly in revenue. So to be fair to them, we intend to pay a premium to take their share out, and then that gives us 1/10 of the plant, and they can put in another 9 columns and a few more motors, the extended software system, and off we go. Interesting point we didn't mention. The Ekosolve system only uses 130 litres of water for every 1,000 tonnes of lithium chloride. So all the problems that SQM and others have got with water, and up in Cachara and Olores, everyone's chasing water. In fact, water's almost as expensive as lithium up there at the moment. Not quite, I'm only joking, but it is expensive and it is rare. So we're not faced with that problem.
Right. Okay. And again, sorry about this. I just need to understand how the money flows. And then Richlink, they're obviously doing a prepay component. There's obviously potentially some other Chinese debt providers, etc. What does Spey actually end up with? What do they end up owning in terms of the future revenues, and what will they what would their debt position be, and how quickly? Well, I assume if you hit your $1 billion target, it's kind of irrelevant. You'll be able to pay everything back, but you've got to go through these phases. You've got to get some debt, some equity at higher prices, as you say. What's the next 3 years look like in terms of on the money side of things for you and your own balance sheet?
Without any bells and whistles added on, 25 million equity placement. Probably before that, a 10 million equity placement for production well drilling, testing, flow tests, working with Ekosolve, paying for pre-engineering, etc., etc. So probably a max of 35 million, somewhere between 25 and 35. And then we have out of that 25 that's a 25 US amount that will go into the pilot plant with Ekosolve's 25, and then about a year from that date, we will be generating. Let's use a long-term contract figure of 40,000. So we'll be generating $40 million a year of income. Could be as high as 70 million. And out of that 40 million of income, we have to pay Ekosolve 5% license fee. We have to pay $2,540 per tonne to the Argentinian government for their royalty, the 4.5% royalty. And pretty much that's it.
Okay, understood.
Then once we've got that in the end of the second year, which will be kind of December, January 24, 25, we will be putting in the prepayment facility, whether it's with Richlink or whether it's with another company and Richlink. We're still yet to define that. And what we'll do is there's a couple of New York banks operating in Latin America and Argentina, which will basically give us 70 million, and we would look for another 70 million, A, to buy out Ekosolve for their share, and B, to put the other columns in. And then if you use $700 a tonne, $70,000 a tonne, I should say, for lithium, and you've got 20,000 tonnes in production, that's where you get your 1.4 billion. If you've got one 10,000 tonne plant in production at a long-term contract price at the moment, which is about $40,000, $40,000 to $50,000 a year, call it 50 to make the maths easy. You've got 500 million. If you've only spent 130 divided by 3, and you can pretty much figure out that you've got a 4-month payback. So the payback, if you're shipping quarterly 2,500 tonnes, it's almost in the first quarter you pay back all your debt.
Okay, fine. The pre-engineering money. So that's what I was trying to get to with Ekosolve. I was trying to understand, like, if they've got to wait for this NSR, that's a long ways off, so that they're having to kind of carry their costs. So you will contribute some sort of pre-engineering cost to what they're doing, yeah?
Oh, yeah.
Yeah.
Spey will be funding all its engineering costs, and that's why we need to raise the extra $10 million to get all that done. But having said that, we're already up to Class A estimates that Ekosolve are doing in terms of, reinforced fiberglass tanks. We know what the shakers look like. We know the cost of the solvents. We're applying for the licenses. We've got 3 environmental permits underway at the moment, one for the pipeline, one for the actual processing, and one for the return of the brine back into the salar and other locations. And we're also putting a small desal plant in, or we have plans to put a small desal plant in so the local community can have fresh water, because, as I said, it's getting more and more rare. And the beauty of a desal plant is it operates much more efficiently at 3,500 metres above sea level. When you've got plenty of sun and freezing cold mornings, condensation's just a cracker. And the other thing is that you've got plenty of flat land and plenty of wind. So you've got all the prerequisites that you would need to have a highly tuned desal plant, and plenty of solar power to drive it, because that's the big problem with desal plants is energy. And if you've got a megawatt of solar power there backed up by a diesel generator, your home and hosed.
Right. Okay. So I asked you earlier about, what are the concerns that people had when you were on your road show. You've explained a few of those, and maybe a few of these new shareholders get washed out, and they can hold on to their warrants, and that's great. But it's still, a small company, just over 20 million in market cap. You've had a few kind of false starts in terms of the, shares going on a rip and then falling back again. So you're laying out a story of a much more kind of, I guess, professional company who've got a process to deliver your vision, which is great. Is one of the other kind of long poles in the tent, as it were, the fact that it's Argentina, the whole environmental issues we're seeing more broadly in South America, and lithium obviously it's much needed, much wanted by OEMs and car manufacturers, battery manufacturers broadly. But there are some restrictions on the way that mining companies are, judged and viewed in country. We've seen a lot of, NGOs. We've seen a lot of local unrest, etc. So how do you deal with that side of things?
The University of Melbourne has a very, very strict ESG compliance framework. And you got to remember, they're the master license holder. Ekosolve is the commercial licensor. And everybody that signed up, including Spey and some of the other companies, will be held to that framework. That is music to the ears of most of the NGOs. It helps the Argentinian government because they don't have a University of Melbourne ESG framework. So that'll be delivered to them on a plate. And also, there are very few CEOs that have got postgraduate experience as geologists in brines, in chemistry, in geophysics, which I was fortunate enough to acquire over the years, and have the chemistry background as well as having 15 years in investment banking. So I can kind of drive the agenda both ways, plus having been beaten up in the various years in Argentina when the peso went from 4 pesos to 40 pesos almost overnight, and inflation hit 54% and stayed there, and we all said, no, it'll come down, and of course it hasn't come down. So and I'm used to working in a US peso economy, so we're very well prepared. And it's really just a function of, I've been a CEO of 4 other lithium companies at 5 or 6 years at a time, and build along. So I know what to expect, and with Jose on board as well, I get to hear the minutiae of politics and what's happening, and water, the peso exchange rate, and doing the right thing via the community in the sense of getting their agreement. And the Pocitos community is delighted that we're there because they know, and they're experiencing now, the restaurant's full, that we've rented some land, we've got a 10,000 litre diesel tank on board, all the things that they want, we delivered in a matter of weeks. So, we're feeling very positive working in Argentina.
Great. Okay. And so on the environmental side, that's very comforting. More broadly, last year talks of nationalisation as well. There's no kind of legislating for that, I suspect. What's the actual reality on the ground? Because you've got a very technical solution from which to extract lithium. You're saying it's better than the brine ponds solution in terms of how quick it is and how much less water it uses, etc. Does that hold you in kind of good stead when you're having these conversations locally?
Everybody asks you, how much water are you going to use? That's the first question, not how much lithium you're going to produce. So and that's critical. And when they hear and understand, and I show them the mass balances for the system, they quickly realise that we are not a water user at all, and in fact we're probably a net water producer. But the other issues that people are worried about is the general well-being of the communities, and so when we were running Admiralty Resources at Rincon, we helped out with dental care. We helped out with resources they couldn't access just because, A, the cost, and B, the availability. and that was well received. And we're going to do the same thing again. We have a group that does cleft palate surgery, and we're going to arrange for them to come in and help the kids that have got cleft palates. The Smile Bite Club, I think it's called. But so there's lots of things we can do to assist the community apart from jobs and obviously increasing the gross product of Argentina.
Well, look, Phil, I appreciate you giving us the time today and sort of running us through this. Looks like you are driving some big step changes in the organisation. Ekosolve. It'll be interesting to see how that progresses and gets and the whole project gets financed. I guess. What are the kind of moments that we should be looking to next? What if we're observing from afar?
I think from a geology point of view, I think it's the production milestones, both in Candela and in Pocitos, and any new acquisitions. I'm encouraging the board to reshape itself to be running a $500 million organisation, not a small listed company. And that's got some changes. They're not going to happen overnight, but they'll change as we go through the process. And I guess investors should be watching for contracts with the Ekosolve mini plant system, and lodging 43101s, because we've got two inferred, indicated, and measured, and then we've got a proven and probable. And then we've got basically the proven and probable going to a banking feasibility statement, more for the board than a prerequisite to get approval for the board, because we've got such a wealth of data from our friends at Ekosolve that we're comfortable with that right now. It's just a matter of we have to figure out the flow rate, which will come from our pumping tests, and what our average lithium value is, and then we can work out what size plant we need. So we can say whether it's a 10,000 litre plant, a 25, a 50, a 40, a 30, we can get the size of the plant, and then off we go. And we're assuming it's going to be about 35,000 litres at Pocitos and about 25,000 litres at Candela II at Incahuasi.
Okay, Phil. Appreciate your time today. Thank you.
Thanks, Matthew. All the best.